Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at Arpa over here, and what we see is a 335 Elliott wave flat pattern. We see a three-wave move to the downside, so this is your A wave. Then we see another three-wave move up, so you have your A wave, B wave, and then your five-wave move within your C wave. And then you have a five-wave move to the downside to complete your macro C wave. So you have your wave 1, you have a double top for your wave 2, your third, fourth, and fifth wave. Okay, so what this would look like is this over here would be your A wave, this is your B wave, and then you have your C wave right here. So this is a classic 335 Elliott wave flat pattern. And we have perfectly come down to the 78.6% fib and had no daily closure below it. So if we go on the daily time frame, we can see that we had no daily closure below this 78.6% fib right over here. Okay, we actually formed a bullish pin bar right off of it, and we're seeing some nice follow through from here. What we also see over here is we have come down. So if we take a fib from this capitulation wick up to this high, we have come down to the 70.2% fib. Okay, so that's very significant. Let's put some moving averages on our chart over here, and what I want to see, or what bulls would want to see, is a move back above this 21-day SMA right over here. Okay, so a move back above this 21-day SMA to confirm a bottom and to confirm a shot at breaking above this high over here. Okay, so let's continue to monitor this. What we actually see over here when we zoom in a little is an inverted head and shoulders. So over here is your left shoulder. So this is your left shoulder, this is your head, and then this is your right shoulder right here. And now we're making an advance towards the 21-day SMA. As soon as you have a 1 hour closure above it, or even a 1 to 4 hour closure above it, it's likely we're going to see a continuation to the upside for our impulsive wave 3. So if we zoom out over here, we actually see 5 waves. And notice with Arpa that the waves don't follow traditional Elliott wave guidelines. You'll often see that the waves are overlapping with each other. So this is your wave 1, this is your wave 2, your third, fourth, and then your fifth wave. And now what we saw over here was our ABC correction back down to the median. So if I remove these waves here, I can show you that all we did was come back down to this median, this long-term median over here when we zoom out on the 3-day time frame. So zooming out here on the 3-day time frame, we can see that the price has used this level many times. And all it was doing was coming back down to the historical mean before we see the price shift above this high over here. Okay. So let's also take a look at our 4-hour time frame over here. Let's delete everything on this chart. And I can show you that this is your wave 1. Come down for your wave 2 at the 38.2% fib. So this is a leading diagonal for your wave 1 because it did form a rising wedge. Your wave 2 would be considered your bear trap. Come up for a wave 3. Wait, so this is 1, 2, 3. So this is your wave 3, 4, and then we're doing sub wave 5 of your wave 1. Then we're going to come down for a wave 2, 3, 4, and 5, all the way up there, as long as we get back above the 21-day SMA. As soon as you get back above the 21-day SMA, bulls are in full control. Okay, then we can say that we have a shot at breaking above 10 cent towards the 30 cent region to start off with. Okay, Now, when we look at this chart over here, right from the beginning of time, we do see that this is a leading diagonal. Okay, so with the leading diagonal, you do have the waves overlapping, and you're going to see this with a lot of coins, such as Link, VeChain, XRP, DGB. All of these coins had a initial move to the upside, right? After your initial move to the upside, and in this case, we formed a leading diagonal. This over here is your wave 1, 2, 3, 4, and 5th wave. We come down for a ABC correction. So after you have your uptrend, you're going to have what's called a counter trend. So this is your A, B, C correction with a truncated wave 5 in your C wave, and then you have your accumulation range. So this is what you're going to see. You're going to see your move to the upside for your bull market, your counter trend, your accumulation, and then your continuation. So this is exactly what we see over here. Uptrend, counter trend, accumulation, and now after back testing this mean over here, we're going to see our continuation to the upside, likely above 55 cents. So I hope you guys enjoyed the ARPA video. If you want to see more ARPA videos like this, where you can get live daily updates and you can stay up to date with what ARPA is doing, then click the link in my Twitter bio above. Hope you guys enjoyed the video. Peace out and take it easy. See you in the next one.